There's more competition in the market now than ever, and there's more pricing pressure. Those are the things, I think, today that are the most challenging part of the market, and you need size and scale to be successful. Ted Koenig, Chairman, CEO, Monroe Capital. We focus on the lower middle market US, so mostly sponsor-backed transactions, buyouts, recapitalizations, refinancings, growth capital. We like the segment of the 10 million to 40 million EBITDA size company because that seems to be a little less traveled, and we can create a little more alpha in that space than the upper market. The growth has really been driven by the LPs, not by the asset managers. The asset class has performed so well that the institutional investors, pension funds and insurance companies, endowments, foundations, nonprofits, have found the asset class to generate really strong, good, consistent income. So because of that, more money's been allocated to the asset class. That, together with the fact that the bank regulatory environment has become much more difficult for regulated banks in the US and Europe, has driven the banks out of the space. So it's allowed asset managers like us to grow quite a bit and to take that market share that 20 years ago, the banks were doing. Well, it's interesting. People use the word golden moment, best time ever, high tide. I've heard everything. I've been doing this for 25 years. And 20 years ago, the market was good for us. It just wasn't as well known. 10 years ago, the market was good. 5 years ago. It's just that today, because of all the very large asset management firms that are getting into the space, it's become much more well known. And because of that, we get more press, we get more regulators, we have more politicians, more newspaper articles are written about it, so it's gotten much more PR. But the business was always there. You know, when we started this 25 years ago, private credit was a good business. It was differentiated. It was something that the banks couldn't do. It was more custom tailored financing, and it still is. The only difference today is that when I started, 80% of the deals were in the banking segment and 20% of the deals were outside the banking segment. Today, it's the reverse. 80% of the deals are being done by asset management firms and 20% of the deals will be done by the banks.